So you've recently started investing heavily into penny stocks. You are so familiar with such tickers as NOK, AMC, GME, CLOV, yada yada. But doesn't the phrase penny stock stems from that you just seem to make a lot of sense instead of big bucks? And how to make big bucks on the stock market in this chaotic environment as it's right now. And I truly believe that Blockrevision series is an answer to this, as we are following the biggest market whales and also trying to predict where the money will flow off next. So it's very important to watch every move of such big pockets in order to take advantage for us of their decisions. So if you want to be up to date with such important informations, just hit the subscribe button and also watch this episode. Let's begin. Right now, let's get to market mover section, and on today's publications we had inflation rate from Great Britain lower than expected. So right now the inflation is slowing down with this demand that is extinguished. Inflation rate out of euro area have met forecasts, and from Canada we can find it has accelerated after recent lower gauge. So we have little slump, but the inflation is still at a very, very high level. And in terms of recent 10 years, we are right now at the higher level unseen throughout this period of time. And at 2 p.m. we have FOMC minutes from US that we will discuss, for instance, whether the rate target range will be unchanged of 0.25%, and also we'll discuss over the core inflation rate as it's right now. We've seen that it got out of control. So there will be an update to acknowledge that the economy has made progress toward this dual mandate goal since September. And on the earnings announcement side, we had on Tuesday Walmart that has surprised to the upside by 14%, and it has met with a price change of minus, but almost imperceptibly of how this stock has lowered. And on Wednesday we have the publication of Nvidia and Cisco yet to be published. Now let's get to next block of economy view, and in today's subject we'll discuss at first the oncoming most prominent annual conference of Fed, that is a Jackson Hole symposium that will be conducted next week, and it may offer some clues on when and how the central bank will taper bond purchases. So just look at this. Option traders are right now subdued currency moves before this exactly event. So we can find that the greenback is sitting just off its lowest since Feb in terms of implied volatility. So lots of speculators are just assuming that the next sitting will bring some tapering important news. However, the problem with economy is not about hiking any interest rates, because we can do this anytime soon. We need to at first deal with consequences of lowering interest rates. So it's a problem that has led us to the great inequality among society. Just look at this chart. Savings home inequality seen as right now supporting factor for bond bull market, and it's one of the reasons why US 10-year treasury yield is dropping to such extension. So it's quite a huge problem that need to be discussed by Fed, and also Jeremy Powell faces right now opposition from some progressives who don't think he's vocal enough on central banking's impact on income distribution. And also we have the same problem in Bank of England program that has been also recently been criticized by US legislators for benefiting the rich. And just look at this exactly chart, the composition of wealth. We can find here that the household wealth tends to change a lot as people move up economic ladder. So middle income just has mainly the wealth is consisted of principal residence, also pension accounts, liquid assets such as cash. However, upper income takes advantage more of business equity and stocks, and there's relatively 24 and 18%, so it's much upper income is in a better position than middle income in terms of this fiscal policy of Fed that pumping money into the stocks and securities. However, the ultra rich are mainly making their wealth of business equity and stocks. And will Fed finally get to its senses and get out this middle income class of this financial swamp that they were getting there into during recent 1.5 years and even throughout longer period of time? So we'll find this out on this symposium of Jackson Hole during next week, and I will comment this for you as of next. Tapering, tapering, tapering. We can hear it all the time out of Fed's mouth, but it really stops on saying. Right now we can find that issues with example, a COVID is getting more complicated around the globe, and RBNZ is right now pushing away its tendency and its intentions for tapering. But can we say that it is the New Zealand, this New Zealand tendency that could contribute to the mood in the United States? It is highly probable, as we are dealing with a global problem. In New Zealand, just 4 cases were confirmed early this Wednesday, and investors are now seeing a 60% chance that the Reserve Bank of New Zealand will raise its interest rates instead of 100% earlier this week. So just 4 cases infected by this Delta strain of recent has brought us to the fact that we are right now very scared of this situation going around. So most economists expected RBNZ to increase the official cash rate by 0.25 points up to 0.5% to prevent economy from overheating. But right now the change with news of the Delta outbreak has happened. So will it really bring us to the another fiscal stimulus boost out of Fed? It's not really obvious of yet, but we will strictly supervise this next Fed's moves. And besides those problems with pandemic that may return back, there's also a recent summary of Bank of America fund manager survey that shows that overall sentiment has collapsed with expectations for growth, profits and inflation that has plunged in August. So we can find that we've peaked this positive economic expectations on March 2021 when stimulus checks were given left and right. But right now with this stimulus outflow and also this fiscal policy that is preparing for tightening, the economic expectations are getting worse. And it's a really hard nut to crack for Fed that is predicting this pace of economic growth to remain as it was within latest 1.5 year. So it would be very difficult because and we have really just getting through this recession on artificially pumped money. But what if this money will just evaporate and we'll need to face the poor reality? There will be maybe another reason for Fed to consider once again this stimulus and also become more dovish than we are trying to be right now. So will we get finally to this vicious circle that we won't get out from anyway? And if this situation accelerates, we would have an environment of high prices of products with an extinguished demand due to COVID restrictions. So on this situation, that will be very difficult for Fed to not take more dovish stance in order to stimulate demand. So one of the reasons is we need to avoid stagflationary environment by all means. Otherwise, it will be devastating for the US and also the rest of the world. So that's something that we are right now dealing with, and also Fed need to revolve around in its symposiums and other sittings. So on the stock market, there are always some growth stocks naysayers. Michael Burry might be one of them that is right now predicting a crash on Katie Wood's ARK, and is also one of these personalities that publishes Twitter posts with predictions of specific stocks increase in price or decrease, and afterwards removing these recommendations after verification that they turned out to be inaccurate. So if Michael Burry would be so successful in terms of their decisions, he wouldn't also have sold his big stake in GME before it rocketed in February. And I find it's abnormal to make a market profit out of Michael Burry just after predicting once the calamity of mortgage housing market back in 2008, and also Katie Wood of ARK Investments has responded to Michael Burry after she found it this exactly bet against her fund. So she responded that she doesn't believe he understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. So there's nothing more stupid than making sensation of a one bet of a guy that has succeeded one opponent's life in stock betting. Yeah, that's really abnormal. Let's now get to crypto outlook block, and as of first news we have, and on this chart you will find a positive takeaway where Bitcoin may get during this bull cycle if the history repeat itself. So just look at the Google search trends in a Bitcoin phrase. In 2017, we have just got through this maximum level of scale, and during a recent bull cycle since January till May, we just made a double top that reached a 50% of a recent of 2017 interest. So it bears a striking resemblance to the situation we were just before this spike of the end of 2017, and during May and September of 2017 we just reached a very low Google search trend interest. So it may get us to a conclusion that the biggest spike is just ahead of us. But the one concern regarding this topic is that we just got lower to this lower than this recent low of April, and it makes something that really makes rather the disparity between back and now. However, every single bull cycle on Bitcoin has used to end with such spikes. So will we get to such a pattern this time as well? So we will find out what the time will tell. And this exactly altcoin season index as of Wednesday has appointed us about 16 points of a chart that is indicating whether we are in a Bitcoin season or altcoin season. So right now, instead of all models that are pointing we are just got through the altcoin season, we are still in this low risk territory where we are favoring more Bitcoin than other altcoins. So despite some altcoins has surged in price on the crypto market such as Solana or Luna, mainly we have a rather pessimistic outlook of where we are right now in the chart. So I wouldn't make any risky bet as of now, at least if you won't cross this 25 level, or even better, just get over to this 50s area. And this indicator has been constructed by this mere idea that if 75% of the top 50 coins performed better than Bitcoin over the last 90 days, it's altcoin season. So just bear in mind it's not a perfect indicator, but it gives some clue. And in today's Trade Idea blog, I have for you to propose XPD USD. So it's Palladium stock that is in an interesting place right now. XPD USD recently has made a pullback due to mixed signals over Fed's next move, and also after the downbeat of US retail sales that has a lowering impact on the US economy. And palladium is this commodity that is highly used for electronics, technology, jewelry, dentistry purposes. So it's highly used in the economy, and right now is struggling to make new gains that were previously set on May 2021. So palladium right now is also highly used in gasoline engines construction. However, as of recent, due to its recent very high price, some automakers started pivoting to platinum. So doesn't mean that palladium really going to be forgotten. Just look at the chart of platinum to palladium, palladium to platinum. Right now we are still in this growth territory since February of 2021, and this recent slump is favoring a rebound for palladium. So palladium to platinum chart shows that right now we should get a rebound at least to this 2.6 territory. So on a chart of palladium we can also find that we have just a crossing this often retested support that previously was a resistance, and it means we are right now probably getting to bounce from here. But in order to bounce from here, I need this exactly daily candle to turn to the positive area and get at least above this recent low of 2461. In terms of commitment of traders for Palladium, we can find that we just got to the area where large speculators has turned up again. So it means just if you would like to zoom in, this exactly recent time has brought us another flow of some large speculators. So it means there is some interest in Palladium chart. But in order to make a bet on a growth side for Palladium, I would find this exactly daily chart of today to close at least at the same level as recent candle of 2458. Otherwise, I would find this exactly a chart to get to the south. If you would like to stop here and close above the recent shadow of this candle, I would make my bet with a trading board of something like that. So if we just close, let's assume, if we close just above this 480 level, I would make my bet with a possible risk-reward ratio of 3.14 with a target of recent highs of 2600 with a stop loss at 2449. Otherwise, if we won't just close this candle above this 2458.59, I wouldn't consider this proposition as of a trade as valid. Let's look at the chart of XPD USD in relation to XPT, so a Palladium to Platinum, and it finds a local bottom around this exactly moving average that will symbolize a possibility of rebounds to at least this 2.6 area of a recent July's highs, of previous highs. So there are lots of signs that we will just rebound from this level. So in terms of trade area, I find something as here. If we just close above 2459, there's a bottom of my area of interest up to 2512, and in terms of my area of entrance that I'm interested in, this is exactly this area of a blue box that is limited by 2450, 58, 59, just like this, and also by 2500. In terms of area of entrance, I find this blue box as to be indicator of where I expect to enter a trade if we just close above this 2000, this exactly shadow, and this is limited by 2459 and 2500. So remember about risk management. So Palladium is highly speculative asset. You may play here on a leverage, but also remember about risk management. So only risk no more than 2% of your trading capital. And that's it for today's episode. If you have any question, just put it in the section below. Thank you very much, and let me know if you enjoyed. See you tomorrow.